Good morning, good afternoon, good evening, wherever you're in the world. Welcome to this episode of the Pre-Market Show. It's episode 88. It is Thursday, the 26th of February, 2026. My name is Mandela, and we have a extra special guest who's been on the show before. His name is James Garis. He works over at Macro Markets Group with a good friend of mine, Joseph. So we'll bring on James in just a second. We also have some data that's going to be coming up. Let's get over to the show. And when we come back from the intro, we're going to have some live news data and everything you need to know to start your market day. All right, let's bring on James from Macro Markets Group. James, how are you doing today? How's everything going?
I'm doing well. Thank you very much, Mandela. Thank you for hosting me again. And I'm looking forward to this session. I hope everyone viewing has had a good week on the market so far. As you did just mention, I thought I'd maybe kind of butt in with it, but we did just have the weekly jobless claims report. It was 212,000 versus the expected data, so slightly below what was expected from the weekly jobless claims, slightly below the 215 that was expected.
Yeah, I'm just highlighting it there. Good call out. I'm glad you mentioned that because that's pretty breaking news within the last few seconds. That's just come out. All right. Anything else on the calendar since we're talking about the calendar for today?
There's not too much on the calendar, really. I feel like we're in that period of the 6-week cycle. A lot of people always ask me kind of, how do you track like news? And I always go off a 6-week cycle instead of a monthly one. Obviously, every 6 weeks you have the central bank interest rate decisions, and then every 4 weeks you get your economic data. But we're kind of in that period now where we've had your central bank decisions, we've had your employment data, we've had your inflation data, and you kind of just get the little drabs of data in between. We've got a couple of Fed speakers this afternoon, Fed Miran on Fox Business. We've got Fed Doman speaking before the US Senate Banking Committee, but not anything that will probably be too interesting or market moving. I think the main focus with the markets at the moment is kind of split between two things. We've got the ongoing US-Iran peace talks, and I'll put peace talks in quotation marks because they come out with positive signals and say there's positive talks, and then you get a Truth Social post from Trump hours later saying, oh, I'm going to have limited strikes on Iran. So you wonder how peaceful them talks really are. But I think between that and the kind of AI software stock sentiment that we're still seeing in the market, there was a couple of interesting articles that went out over the weekend. One from Citrin, and it was labeled or headlined as the 2008 global intelligence crisis, like a little kind of play on words, but talking about what would be the upcoming AI crisis, and that if actually AI works and does its job well, is that good for the economy or bad, in the sense of AI being good, but then it kind of takes jobs, and you see obviously unemployment rise, and it was kind of speaking on that. And I think it actually went probably more viral than what was expected. And I think the post was put out Sunday afternoon, and Sunday evening when the futures opened, S&P was like 100 points down, and it kind of spooked the market a little bit. But as always with the stock market, it was pretty temporary, and the S&P's climbing, pushing back towards that 7,000 handle, hopefully, and heading for all-time highs. So I think some of that kind of near-term fear has once again been wiped out of the market. You can only keep stocks down for too long, really.
Yeah, they have this upward drift, and if you look over time, the profits go to the optimists, and we end up every dip eventually ends up getting bought. So, no, I think you're right. It's going to be interesting today after NVIDIA earnings. Also, I think to see how the market kind of reacts on the day after. I just pulled up here the pre-market price, and I don't know if you were watching. I'm sure you were. After the earnings came out, it spiked up higher. and then that faded, and now it's kind of right back where we pretty much where we closed. So I think people are still trying to figure out how to play this. It's a very interesting move.
I put a little post in the group chat this morning. It was kind of just speaking about the bar being set so high for NVIDIA, and that kind of market players are basically pricing for perfection when it comes to NVIDIA. So anything that doesn't just meet that very, very high bar, you kind of obviously see the bit of a pullback and a bit of kind of selling that we've seen a little bit. And like I said, I think it's just that bar being so high. Obviously there's concerns about the AI trade, but at a strong triple beat obviously on the earnings, with revenue, earnings and their guidance. So there is still optimism there, but obviously the early market reaction, before the markets opened today, has been a little bit mixed. Shares rose about 3% kind of last night, but then settled down a little bit. So it's just, I think that bar being so high, and I think the concentration of NVIDIA being so big for the Nasdaq. I think it's 14% of the Nasdaq on the weightings, and I think about 7-8% of the S&P. It's almost like, if NVIDIA's bad, the market's going down. Like NVIDIA's going down and dragging the rest of the market with it. But I think we'll wait and see. I think that little kind of early market reaction and the optimism fading a little bit, I think will probably decline, and I think the market will kind of continue the kind of strong trend we've seen in the last couple of days. Really, the earnings beat at the end of the day, so even though the bar's so high, at the end of the day Wall Street will go, oh well, NVIDIA beat earnings, lovely, and the optimism will probably be back.
Yeah, I think you're right. I think even though there were some points that, or some of the statistics weren't as favorable, or they didn't surprise to the upside as maybe some people would have liked. We've still had the data. We still had the earnings. That's now behind us, and the market doesn't like uncertainty. And what NVIDIA gave us yesterday was that certainty. So yeah, I think you're right. I think it's such a big behemoth. I didn't realize it's like $4 trillion market cap. So it's definitely gonna move. It's gonna move its neighbors. Let's put it that way. So let's see. Should be an interesting day.
One thing I saw that was a little interesting, I think over the last couple of years, really since 2023, 2024, and then obviously extended even further the last couple of years, but is the kind of Mag 7 concentration on the indexes. It's, if you're trading the S&P and the Nasdaq, well, really you've only got to focus on them. Obviously it's a bit different for the Nasdaq, but the 7 stocks, it may as well be called the S&P 7 than the 500. But something interesting I put out earlier as well is that 66% of the S&P 500 stocks, so it's actually 332 out of the 500, they're outperforming the S&P 500 index year to date. So them stocks are performing better than the index, and this is the highest since that data began in 1986. It's a stronger reading than the 2000 dot-com bubble burst. But out of that, NVIDIA is the only stock from the Mag 7 that's gaining more than the benchmark so far this year. So your Apple, your Amazons, your Microsofts, they aren't gaining more than the S&P, which I thought was a little bit interesting. The kind of market leadership is becoming slightly broader, for 332 of the 500 kind of companies in the S&P 500, for the top 7, only one of them to be performing better than the index. I thought was pretty interesting and a bit of a surprise really when I saw that data earlier on. I don't know what your thoughts on that are.
Yeah, it's nice. I mean, I do like to kind of look underneath the surface and get into the weeds a little bit, and to kind of see how NVIDIA is moving in correlation to its Mag 7 peers. It shows you that it's kind of holding up the Mag 7, and it's outperforming a lot of its brothers and sisters in the market. I do think that in order for us to get a nice sort of continuation of the rally, you talked about S&P getting back above 7,000. I feel like NVIDIA is gonna have to kind of participate in something like that if it's going to be a sustained move higher. But yeah, you brought up some really good points about how the actual sausage is made, or how the market actually, the index actually works, and it's not all not all companies are equal.
I think that data as well, if anything, just if you was to look at the S&P 500 on the daily time frame, for example, since the 13th of January, that kind of 7,000 level or 6,995, like as close as you can kind of get to it. Obviously, the last couple of months, like to start this year, the market's really moved sideways. There's not really been any movement. We've tried to test that kind of 7,000 maybe 1, 2, 3, 4 times or so, and we're looking like we're heading back there for this fifth time. But that maybe explains a little bit why, like, even though 66% of the S&P 500 is performing better than the index as a whole, we know that the S&P 500 so heavily weighted and concentrated with them Mag 7 stocks that if out of the 7 only one of them's beating the benchmark and them other 6 companies performing worse than the index year to date, it probably kind of explains why S&P 500 has been a little bit sideways and you haven't broken through that 7,000 level, because for it to break through that 7,000 level, you probably need all Mag 7 stocks playing ball and kind of obviously all correlating and all moving the same way. And the fact that we're only getting NVIDIA beating the index so far maybe explains really why we're moving a little bit sideways as well. Even though, you know, if you said to someone, 66% of the stocks are doing better, why is the S&P not rallying higher? That's probably why, because although a large majority of the stocks are performing better than the index, the stocks that really matter aren't, if that makes a bit of sense.
Yeah, I've just, I'm so glad you mentioned that. As you were speaking, you gave me an opportunity to kind of throw this together, James. So this is exactly what you were saying. In the candlestick is NVIDIA. Then we got the blue here is S&P. And then this is the Mag 7. So this is exactly what you said. Mag 7 is lagging. And this is pretty much since the start of the year. We can make it start right on January 1st. But yeah, it's very fascinating to see how a behemoth like NVIDIA. Did you know that NVIDIA, the Russell could go into NVIDIA and there's still be an extra, I think, 3 billion market cap. It's ridiculous. So yeah, S&P is blue, green is the Mag 7 index. So this would be the zero line for the year.
Yeah,
and it's almost like NVIDIA's doing the heavy lifting.
Them 4 peaks of that blue line, you know, from about the 13th of January, is kind of what I was just saying. Like, that's just below that 7,000 level in the S&P, and that's the point I was making, that the S&P really, since the start of the year, tried to test that 7,000, tried to test it, but not really broken through exactly that kind of line there. And like I said, you know, when 66% of the individual stocks are doing better than the index, you'd think, well, why is it not breaking through? Why is it not rallying? But the 7 companies that really matter and obviously are so heavily weighted, 6 of them are underperforming. And NVIDIA, although it is a behemoth, it's, you know, not enough to kind of drag the S&P through that 7,000 level on its own, I think. And maybe that, you know, then kind of shows that kind of divergence, maybe then shows a little bit of a good opportunity for the S&P, and in particular the Mag 7 on its own as well, with the Mag 7 lagging a little bit behind. But obviously we would need some kind of catalyst and better optimism around them, you know, top 7, but really the other 6 companies for them to kind of catch up. But I'm sure when they do, that's when S&P will really kind of break that 7,000, maintain it, and carry on further.
Yeah, I just also noticed NVIDIA wasn't doing all that great since January. It's only been the last few days, pretty much this week, is when it finally started, I guess, in anticipation of last night's earnings. It started to really take off. But if we go back to like the January, February, early February, it really hadn't performed quite well either. So it's it's amazing what earnings can do.
Yeah, and I think that just shows as well for people like watching this that maybe obviously hear about earnings but don't really understand it too much and stuff, I guess the first thing I would say is 4 weeks ago you done an amazing workshop webinar about how to profit from earnings season, and I'd recommend anyone to kind of reach out and go back and watch that, because 4 times a year you obviously get earnings season, and it's a great kind of opportunity to capitalize off of the earnings reports. But also it kind of shows people that although you have your earnings report, and I think you spoke about this a bit in the workshop, you have your earnings report and you think, right, yesterday I'm going to trade NVIDIA like around earnings, or the NASDAQ around earnings. You can quite clearly see from that chart that good earnings beat has almost been getting priced into NVIDIA's stock over the last few days, and it's about having that kind of initiative to think before the earnings come out what could potentially happen. It's kind of that buy the rumor, sell the facts scenario almost that we're starting to kind of see, obviously, before the open, like the early market reaction after the earnings.
Yeah, right here. So this would have been the Monday open. This week, Monday, we opened here. And that's kind of when we started to creep higher. So it probably would have been a good play if you would have gotten in on Monday and then maybe gotten out yesterday before the close. I think that's still a good trade opportunity. Looks like it was up over 2 or 3%. So yeah, it's different ways to play. I'm glad that you mentioned the actual workshops, because I do have something I just wanted to pop up in the top left above my head. There is a link for the event that we're going to be doing, and maybe we can talk a bit about it later, but I have a little bit of information down the bottom. There is going to be a special traders event. I don't know if you want to talk about it now or talk about it before the end of the show, James.
If we spin back to it at the end of the show, then I can I'll set up my screen share and I can maybe explain a few details about it as well. So for anyone watching, stick around till the end of the show and we'll give you a kind of little teaser and explanation of what's going to be happening at our event when Mandela will be presenting.
Yeah, that sounds brilliant. Just a reminder to anybody who is watching, thank you very much for watching today's show. We are giving away a $5,000 account. So if you're interested in entering the prize giveaway for the $5,000 account, all you have to do is click the link in the live chat. That will take you to a Google form. Fill out the form and your name will be entered. We'll do the draw at the end of this live show. Just want to say a quick shout out to everybody who has joined. Looks like we have Kabisa, we have Sean, we have looks like Tesla Trader. So Andrew is in the live chat as well. Thank you very much for being on time today. Adib, Brian Walsh, and Mark, all watching us live today. If you have any questions for myself or James, feel free to also let us know. Happy to address those. Okay. Okay, so we talked a bit about what's happening going forward. Anything in particular in terms of so one question that came to mind, James, was what do you think, in your experience, is one of the hardest things for a trader to do to survive in this business? And I know I'm putting you on the spot, but I get this question often. What's the hardest part of trading?
I mean, I think the hardest part of trading always comes back to the psychology side of things. The psychology, obviously, within that, it's a kind of cliche word nowadays, gets thrown around a lot, because within psychology, there can be loads of different things. Is that risk management, over trading, discipline, not sticking to the plan? It covers so many different things. So I think you speak to people, sometimes you speak to traders that say, I'm struggling with psychology, and it's like, what exactly about psychology though? And you kind of obviously have to try and break that down and pinpoint where exactly they're going wrong. So I think obviously psychology's always something. And I think the difference with psychology is if someone's, say, using technical analysis and they're trading for a couple of months and they decide their strategy's not exactly working how it may be used to or how they expect it to, they will go out and find a new strategy, and they'll go out and find a new YouTube or read a new book or whatever it may be about how to refine and improve their technical strategy. So people will always work on the technicals. Why? Because it's a little bit interesting and exciting. They don't mind sitting there and watching videos and backtesting charts and all of that side of things. They'll put the work in on that side of stuff. But then when I speak to people about their trading and say they're struggling with their psychology, and say, okay, what are you doing to improve it? And most of the time they don't have anything to say. Most of the time they don't really know how to improve their psychology. And I think obviously there's a few different ways. Don't get me wrong, it's obviously much harder to do, because I think at the end of the day, you can do all of the training and have all the resources in the world, but it comes back to being accountable. And the example I always try to give with that is, if you go to the gym, you go and work out and you think you're probably putting 100% in, but really it's probably about 70-80%. And if you're going to the gym on your own and you say, okay, I'm going to try and eat well, you probably eat well, but you're still going to have them cheat meals and them little snacks, because you're doing it for yourself. Whereas if you go to the gym and you're working with a personal trainer, he's going to get 100% out of you. They're going to make sure you're working full pelt every time, and you're not going to have them little cheat snacks and cheat meals, because you're writing down all your dietary stuff and sending it over to them. And that's a mentor, that's a trainer, that's someone that's holding you accountable. And I think in human psychology, people find it harder to hold themselves accountable and be responsible for their own actions, but doing stuff for other people, you've got to do something for your boss or a family member or a friend or whatever it may be. You don't really want to let that person down, so you're more accountable, more responsible. So I think being able to take that accountability element and be able to use it for yourself is one of the most powerful things. But I think it's obviously very hard for people to do. But in terms of things you can do to improve psychology, there's whether it's, I guess it gets split into a few different things. You've got kind of the books and resources and courses side of things, which is, I guess, material that you can kind of like go and read. And then I guess there's the other side of that learning, if you like, which is having a mentor, which they will hold you accountable, and you will have to go back to them about your trades you've taken and stuff. And if you're up at 3 a.m. scalping Nasdaq and you've gone mad overnight, they're going to slap you on the wrist and say, what the hell are you doing, and hold you accountable. But I think the work for that always comes from within yourself, and it's about how you hold yourself accountable and what you do for yourself to be the best version of yourself, and that will reflect on the markets. If you're not the best version of yourself, how do you think you're going to be the best version of yourself as a trader, if that makes sense? So I guess that's one thing on the psychology part of it, because that's probably the thing people struggle with most. But I guess another thing I'm big on in terms of fundamentals and macroeconomics is that side of things. And I think a lot of the times you'll speak to someone and say, I've taken a trade, and you'll say, oh, why have you taken that trade? And they'll go, the market hit this level and it showed this reversal signal and it had this candle bar or whatever it may be. And they can list off some technical reasons for why they're getting in that trade, but they've got no real life reason. They've got no real fundamental kind of macro reason why they're in a position. And I call that kind of bias. So before I'd even look at charts, I'd have a bias. I would have researched a certain asset and go, okay, I am looking to go short on the dollar, or long on gold, or long on the S&P 500, or I'm looking to short the euro, whatever it may be. And I will have a list of reasons for that. And if it's gold or silver or oil or S&P, obviously that's kind of that individual asset. If it's a currency and I'm saying, okay, I'm looking to short the euro, great, now I need a good dance partner. What currency is going to be the strongest currency to trade that against? Is it going to be the Swiss franc or the Aussie dollar? And that way you've got a bias. So I think for me, they're two of the really important things, because a lot of time I speak to traders and say, okay, what was your reasons for entering that trade? They never really say, well, this was my macro bias on this asset. And then I looked at the technicals and used the charts to get my entry and my exit and actually find my setup. So I'd say that's kind of my main two things, Mandela. Okay, that's a very thorough answer. And
I think that is the things that you mentioned are the things that I think, like you said, don't get the most attention, don't get the most press, I guess is one way to put it. But if you're able to basically look at it from that perspective and be able to say, okay, yes, I have this bias going into this trade, but being able to use almost like other confirming or other instruments or other tools that are going to get you to question and maybe build your confidence, or maybe even get you to think twice about entering the trade. I think that's what helps you in terms of your probability for success. So thank you very much for sharing that. I do have a question here. It looks like it's about Jane Street lawsuit. I'm not sure if you're well versed with this, if you've covered this at all. But we did
I've seen a little bit about it floating on X the last couple of days. I've not read too much into it, but this question's from Thomas Catliff, obviously, who's a member with us. But I'm pretty sure he's referring to a lawsuit about insider trading that sped up Terraform's 2022 collapse. It's linked to crypto and the collapse of Terra USD, and more people probably know that as the cryptocurrency Luna. When we saw their kind of collapse 4 years ago now, I was going to say a couple of years ago, but 4 years ago now, 2022. And it's the lawsuit's kind of linked to do with withdrawals from wallets and then pulling out mega millions, towards hundreds of millions from wallets. And obviously the coin was a kind of stable coin, if I remember right, that lost its peg to the dollar, which is obviously completely against how it's supposed to work. But I think Jane Street come back and kind of denied the allegations, said it's desperate and a baseless attempt to try and extract money. So I've seen a little bit about it on X, but not really my area of expertise. And I think in terms of how that will affect the market in the present, I don't think it will probably have too much effect. I think it's probably just corporate lawyers and suits going back and forth and trying to kind of peg a lawsuit against each other. But I don't think in terms of market dynamics at the moment it will play too much a part.
Okay, well, thank you. That's more than I was aware of. I do trade crypto, but thank you very much for your question, Thomas. And feel free to ask any other questions that you have. We do have a question here, James, from Mir Sabir on the CTI platform. So Mir Sabir is asking, is backtesting a strategy with an algo going to help you with your win rate? And if the backtesting gives you a good win rate, does that give you a good idea of live trading?
I mean, I've got a bit of a controversial take on backtesting. So maybe I'm not the best person to answer this, and maybe it's better set for you, Mandela. But the reason I've got a bit of a controversial take on backtesting is because you can go and try and find the perfect technical strategy, and you can do all of these kind of things to put this strategy together and say, this is exactly what I'm looking for my perfect strategy to play out. And then you can go and back test it on, gold or the S&P or oil or silver or currency pairs, as an example, over the last few years. And you'll back test it and it will kind of work out of some sort of percentage win rate that you'll have and be able to kind of take forward. But I always think, well, markets are different every year. And you never know what's coming up around the corner. You never know what's coming up this year and next year. So although that strategy may have worked over previous years or at different phases throughout different previous years, it doesn't guarantee that it's going to work kind of going forward. And I guess that's where I kind of lean more to that macro side of having a bias on an asset for the future, and then kind of delving into the technical side to see if I can have a setup that can play with that. Sometimes I'll have a bias for an asset and I'll go over to the technicals and I might think, oh, this market is going to go up, but my technicals don't maybe align and I can't take a trade because although I had the right idea, I didn't necessarily have the right setup for it. And that's obviously a part of like trading as well. So me personally, controversial take, I'm not the biggest fan of backtesting. But on the flip side, if someone's a very heavy technical trader and they're looking for maybe that kind of one moment of the day at the market open, for example, where they're looking for like a certain pattern, or like your, say, open range breakout strategy, for example, that's where backtesting would probably work very well, because you're looking for a certain something at the market open and you can go and test it at every market open for the last however many days and years you want, So it depends what kind of trader you are, I think.
Yeah, that's a brilliant answer. And so I do have a strategy with the opening range strategy. It's a very specific strategy. And like you said, it can work in specific instances. But I do believe as well that a strategy should be something that is optimized, and maybe optimized is not the best word, but it's something that is kind of living, breathing. So you should be able to improve on it with slight tweaks. If you notice that there's something in particular in the strategy that is not working, or that is exposing a weakness, then you should be able to reassess that, whether it's at the end of the week, end of the month, end of the quarter, and you should be able to improve your strategy as you go. So I think just depending on relying on back testing and hoping that the win rate doesn't change is I don't think that's a good approach. And also remember, the markets are always moving. They're always changing. So like you were saying, S&P hasn't been above 7,000. So breakout strategies haven't really worked very well since the start of the year. So you have to kind of also tailor it to the environment, the actual market that is in front of you. So yeah, thank you very much for your questions. We do have the prize giveaway now, James. We're going to give away the prize, and then we can finish up with the explanation about the upcoming event.
I'm looking forward to seeing who's going to win this prize and win the account.
There we go. All right, let's see here. So we've got a few entries. What we'll do is I'm going to just thank you very much, everybody, for entering today. Let's copy everybody's name here, and then we'll pop it here. Okay. So all the best of luck, everybody, and we'll get a drum roll going. Here we go. Okay. All the best, everyone. And the winner of the $5,000 CTI account is Mears. Congratulations, Mears, for winning the prize giveaway. You will have a $5,000 account with your name on it, and look out for posts and contact details from City Traders Imperium. All right, James. I think I'll hand it over to you for I see your screen. Can I pop your screen up?
Yeah, definitely. Pop it up.
There we go. Nice.
Yeah, so for anyone watching this, obviously last little part before we kind of head off and get ready for the US Open. But with Macro Markets Group, we are hosting our next event on Saturday, the 2nd of May. It's at the Radisson Blu Hotel on Bloomsbury Street in London. Lovely hotel, very nice area, just across the road from the British Museum, but very easy to get to. Obviously, we are a couple of months away, March, April, and then it's at the start of May, and Mandela will be presenting for the day. So it's an opportunity to learn from Mandela. Obviously, we spoke a little bit during this call about kind of psychological issues that traders have, and Mandela's going to cover some of that side of it. And we've also touched a little bit on strategies that he trades, and he's going to be speaking about that, which I'll show you in a second. But the event really is an opportunity to obviously learn from Mandela and learn about his strategies and gain knowledge from him. It's also an opportunity to connect face to face and build some kind of real relationships with other traders. You know, most of us, or a lot of us, are in communities, and you maybe see traders online or in group chats and stuff like that. I'm very fortunate that over the last 6-7 years, I've met hundreds, if not thousands, of traders face to face, shook hands with them, met many of them multiple times as well through events and the trading floor. And there's nothing like meeting other traders in person and building proper relationships with them. It's how you end up having relationships now, say, like what we've got with Mandela. Obviously, congratulations to Miz. He just won a 5K funded account, which anyone that comes to the event is also going to get a free 5K account from City Traders Imperium, because the founder of City Traders Imperium is going to be there on the day as well. So Saturday the 2nd of May, It includes an event ticket, it includes 1 3-month membership at Macro Markets Group. There's a free 5k funded account, like I just mentioned, and all of your refreshments, breakfast, mid-morning and mid-afternoon meals and lunch is all kind of covered as well. Just scrolling through the PDF quickly. Obviously, for anyone that doesn't know this, it's not our first event. We hosted a technical analysis event, psychology event all about trading gold, and then a big summer trading event last year. There's a couple of photos from it, but this is the room that our event's going to be in on the 2nd of May. On arrival, obviously, you've got your kind of coffees and bit of breakfast, and you can chat with the team and meet some people. Then we'll head over to the photo room that I just showed you, and myself and Joseph, my business partner and co-founder of Macro Markets Group, will do a little bit of an introduction, but then we'll be handing it over to Mandela, and that's a little bit about his kind of track record. But Mandela will be going through psychology and consistency to start with, the kind of foundations of consistent performance and mental habits that will separate you from the rest, and how to deal with emotions. And then there's a bit of a tea break mid-morning. And then in the second part of that, Mandela will spin back to the psychology side of things, sharing practical techniques to overcome setbacks and enhance patience and build kind of confidence in the markets. And then he will be interviewing some traders from the audience that he's worked with and coached as well, which is very exciting. And then it's lunch. Got a very nice lunch planned out, 3-course a la carte meal, obviously your selection of lunch for whatever you want. And then into the afternoon session, it's all about the best day trading strategies, which is probably one of the best parts. Like I said, although psychology is probably the thing people struggle with most and probably need help with the most, and we spoke earlier about what people can do to improve their psychology, whether it's books, courses, or having mentors. This is another thing. Come and listen to a real trader with real track record, real experience, and listen to how they're going to tell you to improve your psychology. But for the best day trading strategies, Mandela's obviously going to go over his proven techniques, going to cover a range of different strategies and how to identify them and take them through detailed step-by-step examples and real trade kind of examples and scenarios. Then there's another little afternoon kind of tea break just to get you through the afternoon before, like I mentioned, Daniel, the founder of City Traders Imperium, is going to be speaking, and he's going to kind of delve into his journey in the markets from his early beginnings to then leading a top prop firm. And he's going to be speaking about CTI's mission and vision as a company. But I think the best part of this is he's going to be revealing some insightful statistics about how to become profitable and secure payouts with a prop firm, whether it's better to focus on one asset or multiple, whether it's better to swing trade or scalp, comparing challenges to instant funding, and basically breaking down like how to actually get through that process of buying an account, becoming paid out. He's going to kind of give you the secrets to getting paid out before he interviews some traders from the audience that have traded with CTI and have been paid out by them, and does a bit of a Q&A session for you. So that's a very like unique opportunity. You know, you all probably use prop firms and buy prop firms and see prop firms online, but not many people at all can say they've sat in a room with the founder of a prop firm, been able to speak to him and find out secrets about the prop firm world and ask him questions. And that kind of wraps the day up. A few closing remarks from us, and then we have a little bit of a networking session before we head to a nice social bar and enjoy the evening with some food and drink. So that's a bit about the event. I'm really looking forward to the event and meeting everyone there, obviously listening to Mandela present, you know, listening to Daniel, speaking to a lot of the different traders, hearing about the interviews as well. So for anyone that's interested in that event, reach out to Mandela, reach out to myself or Joseph Mosley in the Macro Markets Group chat and secure your ticket, because there's a couple of months until then and tickets are starting to go, because obviously a lot of people have been to our events last year. Through the 4 events, we had over 125 people at them, you know, so a lot of them will be returning for this event. But that's all from me, Mandela. I'm just looking forward to seeing you present on the day.
Yeah, I'm very excited, and just hearing it, I can picture the event in my mind's eye. I am psyched to meet so many different traders, and as you said, it's a lot about the network that you surround yourself with. So thanks again for putting this together and for inviting me to speak. And yeah, if you are curious and interested, feel free to reach out, and we'll be happy to get you involved in the community. So really looking forward to this event, James. Thanks.
So am I. It's going to be a good one. And Saturday, 2nd of May, it seems far, but it will come around quick. And like I said earlier, the market changes so quickly, so often. Who knows what the market could look like in May as well? You know, will the S&P have broke through 7,000 by then? I bloody hope so. Yeah. But maybe a bit of an AI crisis looms, and maybe we've pulled back 10% at that point. You know, who knows? So yeah, like you said, Mandela, if you're interested, want to find out more information, want me to send this PDF over to you so you can have a proper read through, just reach out and make sure that you get your ticket, as it's limited to 50 spaces.
Yes, and I know that tickets are going fast, so you want to act quickly, and we'll provide some more information, I think, between now and then, James, if anybody does need that. So that's it. I think we got to get ready for the New York Open. It's always a pleasure having you on the show. Any shout outs? Any sort of final thoughts before we wrap it up? Sorry to put you on the spot.
No worries. Again. I would just say, in terms of the US market open, like what I would be watching before then is keep an eye, obviously, on the S&P 500 or NASDAQ, kind of whatever one you prefer to trade. And I'd be keeping a very close eye on NVIDIA as well. But as we've kind of discussed on this call, NVIDIA outperforming might not just be enough to kind of drag the S&P to the highs and actually break them, considering the other 6 of the Mag 7 are lagging. So I'd keep that in mind. But obviously at the moment we've seen that kind of buy the rumor, sell the fact scenario play out on earnings. And lastly, I would say just keep an eye on the US-Iran talks. As I mentioned, we get these talks and then they kind of come out and say, oh, there's been positive signals, and then you get a Truth Social post from Donald Trump and he says, I'm thinking of limited strikes on Iran. And it's like, well, you're speaking about striking Iran, you just finished peace talks and said it was positive, so what one really is it? I don't think there'll be any breaking kind of news headlines about that today, but I think it's definitely weighing on market sentiment a little bit. So really all kind of things at the moment is focused on the geopolitical side and the AI side of the market. But good luck for the US session, everybody. Thursday, normally the busiest day of the week volume wise. Hopefully today is no different.
Yep, absolutely. I noticed yesterday was low volume. We actually moved higher on low volume on NVIDIA NVIDIA earnings day. So yeah, I think it's all to play for today as well. Thank you very much, James, for joining us. And I'm just going to say, everybody, have a wonderful day, have a profitable day, and we'll see you all next time. Thank you very much for watching, and also a special shout out to Macro Markets Group, and phenomenal resources, phenomenal service that we find very helpful. One of the first posts that I see in the morning is from Macro Markets Group. It's usually you, James, sending the Asian Pacific update. So please
news
keep those coming.
Events for the day, and 5-minute read, and everything that's kind of happened yesterday and looking forward to for the day ahead. So it's important to read your news in the morning before the market opens. But Mandela, thank you very much for having me on. Happy to come back anytime. I hope everyone's enjoyed the call and taken some stuff from it. And like I said, good luck for the US session and for the rest of the week as we head into, obviously, month end tomorrow.
Yes, that's a very good point. Last day of the month. So also month end flows. Usually portfolio managers are assessed on a monthly basis. So we could see some window dressing. We could see some interesting moves between now and Friday close. Thank you for highlighting that as well. Could be a little bit of fireworks in the next 2 days. Let's see. All right, James. Have a wonderful day, everybody. Take care.
Thank you, Mandela. Take care, everyone. Have a good afternoon.